Namaste class, welcome again. Now in this lecture we will see few more examples of how we post in ledger. So we will see how we post from journal into ledger. Okay. So here second example, you are given below an extract from journal of MS Bridge Bhushan and Brothers. Write their ledger. Now you can see the first entry is purchase account, debit 15,000 to cash account, credit 15,000, being goods purchased by cash. Now you are familiar how you can do the journal entry. When you have to prepare ledger entry, there are two type of question. One is that you have given a journal entry, and from that you have to write the corresponding ledger entry, or you have given some transactions, from that you have to first prepare a journal and then you have to prepare a ledger. Okay, so here journal is already there. So purchase account and cash account. Second entry is cash account is debited with sales account. That means we have sold goods for cash. Third, rent account is debited with cash account. That means we have paid rent, paid monthly rent. Drawing account debited with goods account. So we have withdrawn some goods from our company for our personal use. And last entry is salaries are paid. So salary account is debited to the cash account. So salary is paid and cash is gone out. Okay. So these are the entries and we have to prepare the ledger. Now for ledger we have one account called purchase account, one account called cash account, then we have sales account, we have rent account, we have drawing account, we have goods account, we have salaries account, and that's it. Now cash, you can see that here cash involved, here cash involved, here cash involved, and here cash involved. So in out of 1, 2, 3, 4 and 5, out of 5 transactions, in 4 transactions cash is involved. So let us first draw the post ledger entry in the cash account book. So our heading will be Bridge Bhushan and Brothers ledger cash account, right? So it is very important that you write this heading. This heading also contain marks. Now here you see that page number 8 is mentioned. That means all these entries are done on page number 8 of ledger account. So your ledger account page number 8 is there. We have to prepare the ledger account for cash account. We have to prepare ledger for cash account, I will say. So now here in the first entry, cash account is credited. So on credit side I will write this entry by purchase account 15,000. So you can see here by purchase account 15,000. And journal folio. So from journal it may be some page. So as here it is 11 mentioned, so I will consider that this is 11th page of journal. Now so this ledger folio and journal folio, it is your choice. You can keep it blank in your paper, and if some information is given about them, then you can write that. Now second cash entry. So here our cash account is debited, and sales account is credited. So on debit side I will write 8,000. Cash account is debited by 25,000, sorry, and corresponding credit entry is sales account. So I will debit my cash account, and in particular I will write to sales account. Next, cash account is credited. So again I will go on credit side, and on 10th April I will mention by rent account. Then on 30th by salaries account. Right. Then after that what I will do? I will total here. So this total is 25,000. I will total here also. Now when you take total, what will happen? That you will not get 25,000. You will get less than that. 15,000, 2,000 and 3,000. It gives me 20,000. So there is a difference of 5,000. So that difference of 5,000 I will write here as by balance carried down. What I will write? By balance carried down 5,000, and I will balance this, and this side will become 25,000, 25,000. So this is a very important stage. Now if on debit side amount is less, then I must have entered it as to balance carried down. On this side I will write by, and on this side I will write to. Second account is purchase account. Now purchase account, only one entry is there. So my purchase account is debited. So on debit side I will write to cash account, because purchase account is debited by cash account, to cash account. Now the entry is of 15,000. So 15,000 I have written. On this side nothing is there. So I will balance. I will say by balance carried down 15,000. Next is sales account. So sales account, this only one entry is there for sales account. So my sales account is credited, and the respective account by which it is credited is cash account. So in sales account I will say sales account. On credit side I will write entry 25,000, and here I will balance it to balance carried down. In the same way we have done rent account, salaries account and drawing account. Posting of opening journal entry. On the closing date of the accounting year, an existing business prepares its balance sheet containing debit and credit balance. Next year the books are started with the same balance. Okay, so our business is continuing year after year. So what we do here, we by the end of year, like on 31st March our business come to an end. So on 31st March what we do, we prepare a balance sheet in which we have total debit and credit balances, and those balances we write in the journal book of next year. So the next year the books are started with the same balance. The journal entry passed for this purpose is known as opening entry. The opening entry is posted in a special manner. Instead of writing the name of account in particular column, we simply enter to balance brought down in the debit side of account having debit balance, and by balance brought down on the credit side of the account having the credit balance. So by the end of year, whatever debit balance we have, we write on debit side, and whatever credit we have, we will write by balance brought down and by to balance brought down and by balance brought down. So if there is any debit entry, so it is to balance brought down. So let us see an example. Opening entry of Goel Brother Prakashan is given below. So this is opening entry. Now in opening entry you will find that on 1st January we have cash in our company of 10,000 to 10,000 debited, bank account debited, stock debited, machinery debited, building debited, furniture debited, and Gupta book depot it is debited, and respective credit balances what are there at the end of year, they are the loan account, okay, credited to Royal Paper Mills account to Carpenter account. Okay, these are all credit entries being balance of last year brought into the new year book. Now I have to prepare the ledger. So in ledger how we are going to enter? So in ledger what we have done, for cash account we write, because this cash account is debited, so here we write to balance brought down. Okay, cash account is debited by to balance brought down. Similarly bank account will debit, stock account will debit, machinery account will debit, building account will debit, furniture account will debit, and Gupta book depot account will debit, and for all, okay, we will write to balance brought down. Okay, now we have done all these entries. Now for credit side, my loan account is credited, so for loan account on credit side I will write by balance account brought down. So here the entry will be by balance brought down, and like that. So this is how we do the posting in ledger for opening balance. Agreement of account in a ledger. In a ledger, account must be arranged in a systematic manner. In a ledger, accounts must be arranged in a systematic manner. The accounts may be arranged in alphabetical order. Alternately, accounts may be arranged as follows: first person account, then real account, first personal account, then real account, and lastly the nominal account. So what is it? In the ledger, account must be arranged in systematic manner. the accounts may be arranged in alphabetical order. So it is easy for us to take out a particular account. So we arrange them in alphabetical order, and or otherwise we arrange them as personal account at one place, real account at one place, and nominal account at one place. Systematic arrangement of account in ledger help the accountant to locate a particular account easily and quickly. And in small firms, the number of accounts is small and one ledger may be sufficient, but in large firms, the number of account is quite large, therefore more than one ledger may be required. Generally, two ledgers are maintained for personal account and one ledger each for real and nominal account. Balancing of the ledger account. Balancing of an account means finding out the net balance of an account. Balance of an account is the difference between total of debit side and total of credit side of an account. So as we have seen in second example, we have find out the total on debit side and total on credit side. They are not matching with equal amount. So what we have done, we have find their difference, and that difference is called balancing. Okay, it represents the net effect of all transaction posted to that account during the period. The process of balancing an account is as follows. So balancing